Good morning and a happy Monday. Welcome to today's episode of Morning Well. Three things that we will talk about. China banks results, TikTok sale won't be that easy, and week ahead. The S&P 500 wrapped up its best week since early July, driven by improving economic data on the one hand and signals from the Federal Reserve that the central bank plans to keep interest rates low for an extended period. Stocks are in the midst of a steady rally, with the S&P 500 rising in all but 4 trading days so far in August. Signs of progress towards coronavirus vaccine and easing trade tensions with China have also given investors confidence. S&P 500 was up 0.7% on Friday, bringing the weekly advance to 3.3%. That's the best performance since the week ended July 2nd. The index has set record closing highs in 6 consecutive trading sessions. The Dow also climbed, was up 0.6%, returning to positive territory for the year for the first time since February. The tech-heavy Nasdaq was also up by 0.6%. So on a weekly basis, the Dow was up 2.6% and the Nasdaq was up 3.4%. Asian equities will look to keep the rally going after US capped the week with fresh highs. So futures are looking to open higher. The yield on the 10-year Treasury note was at 0.72 on Friday, down from 0.75 levels. Yields on the 10-year Treasuries are still higher than they have generally been in the recent months. One of the reasons for that is that investors have been seeking higher extra incremental yield as compensation for the higher risk of inflation, especially after the announcement where the Fed said that they can run inflation or they can allow inflation to run hot before they start taking any action. The dollar index fell 0.8% to about 92.3 on Friday, remaining close to levels not seen since May 2018, which it was basically dragged on by a stronger yen after Japanese Prime Minister Shinzo Abe announced he will resign due to health reasons. China's big banks suffered their worst profit decline in more than a decade as a cascade of loans to businesses across China are going bad. Reporting their first half earnings on Sunday, ICBC, CCB, Agbank and BBOC all posted drops in profit of at least 10%. Loan loss provisions jumped between 27% to 97% at the 4 lenders. Keeping with China announced new restrictions on artificial intelligence technology exports that could further complicate the sale of TikTok's US operations while intensifying the tech battle between the 2 largest economies. So the new restrictions, which were unveiled on Friday by China's ministers in charge of commerce and science and technology, cover such computing and data processing technologies as text analysis, content recommendation, speech modeling, and voice recognition. Technologies on the list can't be exported without a license from the local commerce authority. So this is an interesting development and something that we will need to keep track of. Reliance Retail is about to get even bigger. Mukesh Ambani's company will acquire the retail, wholesale, logistics and the warehousing units of Future Group for about 247 billion rupees or $3.4 billion. Future Group will merge some of its remaining businesses into Future Enterprises, and Ambani's unit will invest about 12 billion rupees to acquire about 6.1% stake in that as well. So the deal will also help Future Group pare down its borrowings. Week ahead, the central bank speak dominates the week with officials from the Fed, ECB and BOE weighing in ahead of the blackout periods. RBI is likely to hold. The Australian Central Bank meets on Tuesday but isn't expected to make any changes to its monetary policy as really fiscal policy takes the key role in reviving the economy. On the corporate credit front, the US corporate credit market may quiet down a bit as firms shelve issuances plan until the Labor Day holiday. Blue chip companies are seen raising just about 5 billion, down from about 16 billion last week. On the US front, again, we will be looking out for labor market data that's going to come out on Friday. The US labor market probably rebounded further in August. Expectation is for a print of more than 1 million jobs that will be added. The unemployment rate also falling below 10% for the first time since March as employers are added to the payrolls. The data may reflect a boost in temporary workers hired for the US census and be the last positive print before losses strike again is an analysis that Bloomberg has come out with. Also on tap will be ADP employment data, jobless claims, ISM surveys, auto sales, and the Fed's beige book is also something that we'll be looking forward to this week. In terms of earnings highlights, we'll be looking for Broadcom, Macy's, and Zoom Video are some of the companies that we will be tracking. So that's the update. Stay safe and healthy, everyone. Have a lovely week ahead and speak soon.